Good afternoon, Scott with T3 Live. It is Wednesday and things are definitely getting volatile. When we started the day, futures were up, Apple was up, Yahoo was up. Everyone thought, there was a positive tone. And pretty much by, I would say, 9:50, you had the S&P negative. You had the IWM go from green to red. The bios go from green to red. You had oil at a new low. You had mid-levels, mid-levels break on some of those oil names like the XLE and the OAHs, and things started to add up. After yesterday's big move down 380 points in the first 20 minutes, which was kind of like a shot across the bow. Today we closed in the lows, and the question is whether or not this big range resolves to the downside. A lot of little technical clues adding up, lots of sectors broken, and I don't know if that's the case, but yesterday I had a bad day. I got stopped out of most of my longs. I was in like 5 positions and got out relatively quickly. And then today we actually made some money short on the VTF, short the spiders, and I think a lot of people sold some strength. And now we'll see what's next. Anyway, you look at the chart of the S&P. Lots of things to kind of look at here. You had this false breakout here, which was somewhat momentum breaking, and that was 1231. Remember the day 1231, because a lot of sectors, stocks had that potent down move to break the 8 and 21 day, which basically gave you a little bit of that real shot across the bow. PS, this is where we are now. Does this little trend line break? Does bigger support get tested? Does this trend line break? There's a lot of things going on right in here. All I know is that last week a lot of people were very bearish, and just to show you how hard it is on both sides of the tape, and they basically got squeezed out here. Okay, when the market blasted through this mini trend line. Here was your mini trend line, in my opinion, and most active shorts or active traders probably got stopped out right here if they were caught from when it looked as if we were going to break down there. And then that happened. And then from here, this is when momentum somewhat left, when we broke back below 2040. If we were going to hold and have a nice upper level flag like this and go sideways and break above 2064, this level shouldn't have broke, and that happened yesterday. That wasn't game over, wasn't it wasn't the end of the world, but that got me pretty much out of a lot of things that I was trying to hold, because again, not tight momentum, just not pent up, etc., etc. And then today that happened. And basically the question is, does this head and shoulders type formation, which is what you could really see here now, where you have the left shoulder, the head, and the right shoulder, does it resolve, and does it meet its measured move? The measured move from just say 2090 to just say about 1990, just say 100 points. This is 100 points, and that takes you down to somewhere around here, 1910. And obviously the first stop would be breaking this trend line and seeing how we handle these lows here, and then the 200-day. But at this particular point, things definitely look like they're adding up more for the downside than the upside. And that's why I'm actually short a little spiders, and we had some decent trades today. You look at the 5-minute real quick so you could see the chart. Okay, basically it wasn't easy, but if you draw, I guess, some of these trend lines, this was today. Okay, it opened up, right? Here's where it opened up, and you had a failure right there. Let's see, I drew a lot of lines here. Here is when it looked as if it might be able to take out this resistance, get into the gap, and then you had this upper level fail. So that was your sell signal number 1. Then after failing here, it hovered below, didn't snap right back, and gave you a quick move all the way down. Okay, which some people made some decent money short. Rallied up. This was your Fed time right around 2 o'clock. Couldn't push back up, broke below this, 2030, then broke below the morning low. This is actually when I made my money short right here. Right in here I got short, gave you a quick move down, you had a retest, couldn't get back above it, and then boom, into the close. Wow, look at that. So, quite the move. So anyway, you look back at the daily and, rounding type top, and obviously for this to happen, it's got to resolve lower, and then we can figure it out along the way. Russell, which has been hanging in there, and yes, it's been hanging in there, showing some relative strength at times. And if you go here, just so you measure it little by little, this did look as if you had a nice little flag pattern holding more intermediate support. Could have broken above this, and it didn't. So now it's right back into this range. Does this mean it's going to break below this and fall apart? Who knows? But this means you get out of the way and wait and see. We've seen this many times. You look at the bios. First potent down day, we've had a few, okay, and this is your first one that hasn't broken, this trend, hasn't broken the 21-day, but broke below the 8-day, engulfed these 2 days. You haven't seen a day like this. Actually, you saw it here, and it got engulfed and kept going. You saw it here. So, some guys went out short the bios, thinking this is day one down. I think it's okay. It's up to you. You're taking a little, risk because it just moves so fast. But at this point, if you've been, holding on to this trend, why not take a little caution? Because one of these times, this can't be the only sector that goes up. You look at the XLF. XLF is just gross. You had a little bit of a rally off the 200-day. Here was your mid-level that I wrote down in my note this morning saying trade versus did not hold right back down to the low end. And here, remember that 1231 I told you to write down? Well, look what happened here on 1231. That was an outside day engulfing the top of the range. That was your sell signal. And then when it broke to 21-day, and if you did that, then you could have approached this tactically the rest of the time. So anyway, lots of those type of moves out there. Oh, let's just check out the USO. Market notices when it's at a new threshold low, which it was. XLE broke its mid-level. Okay, here was your red dog reversal for a trade that you had a trail. Wrote down today 76 as your stop. Okay, and some guys stopped out and some guys got short. And this is your first potent down day from this little, I guess from this pattern here. And you still have all, highs, lower highs, lower highs, lower highs. So, prudent to get out of the way and see what's next. Some guys went out short this, and you could have done it intraday also. I was staring at it. I think I tweeted right around whatever it was before 12 o'clock. Watch 76. If it breaks, it could be pressured, and I think some guys made some decent money short in that. OAHs basically did the same thing. Broke its actually mid-level range here. So that means some commitment to this bottom type trade is out of the way, and it's still in this gross trend that it's been in for quite some time, ever since breaking its trend here and then confirming it under there and then losing the 200-day right there. It's just been either a net short, a net avoid, or very, very tactical with your eyes very close to your 5 and 15-minute chart for when it breaks. Today, some guys made some money short Netflix. Good for you if you did. It was up $5 pre-market. Some guys in the VTF were shorting it, and now it closed matching this. So it's very extended from the 8-day, very extended from all these. This was your buyable spot. When it cleared 414, now it's a little wishy-washy. You look at Google, what did it do today? Look at that. Cleared this trend line and tried to hold, and right back here. Still a broken stock, still below the 200-day, still below the moving averages. You do get some pivots to trade, but again, when momentum leaves and these broken names get selling pressure, you gotta get away from them fast. Now today with Apple, these are old lines here. Okay, this looks a little different. I hate to say it because I said, listen, don't over trade Apple today, but let's see what happens here on earnings. Okay, here is your gap up, still above this consolidation, still below the highs here, and looks a little different than the last few times. Not crazy different, but look what happened here. This was your last gap up after earnings. Okay, and the way you measure the strength of it is, how much of the gap it holds. This came in the first day and then closed well off the lows, and then your trade could have been when it went above that high, and then your trend started. You look way back when on this Apple earnings, okay, which was much. This is when they announced their split. You had a gap up, held the majority of the gap up, closing the top end of the range, then closed above the earnings high, then started your new trend. So you look at this candle, you look at this candle, looks like just a little bit different than this candle. Okay, closing on the dead lows with the market at a very vulnerable spot. So to me, I'm flat Apple right now, and I'm going to wait for either a red dog reversal or wait for something within this gap. This is pretty sloppy looking. Closing the dead lows here, opened up, closing the dead lows, so they sold this versus accumulated it, so I'm going to wait. BABA, that news came out that the Chinese officials are looking into it. I guess you could say it's still above this. It's still controlled by this downtrend. just for S's and G's, at the end of the day, I went out and I bought the $98 calls, just in case, they come out with great earnings and they gap it up, and, my risk is premium paid. I'll trade it probably tomorrow, but overall, you got to be careful here. So I'm not long the stock because who knows what could happen, but from, 120 down to 98-ish, I feel like the risk reward is okay to be long. But it's options. If I had conviction, I'd be in the equity. But I'm in options, and it's earnings, and risk is just premium paid. I've tried this so many times in the course of this range that I'd hate for it to come out and that news discounted it, and then it gaps up, and I miss it. If it gaps lower and it's horrendous, then I don't care. I'll lose my money in the options, and it'll just start falling more out of play, and I'll revisit. Now let me see what Facebook's doing. Facebook. We'll go to my trusty phone right here real quickly. See what is Facebook doing. It was all over the map. It was up. It was down. Come on. Facebook looked like it was a decent report off the bat. And after being all over the map, it's down a nickel, waiting for the conference call. It beat on revenues. It beat on the top line. Didn't look great. It was strong. Wasn't blockbuster. I guess they're going to see what happens in the expenses. Last time on the conference call, they guided 50 to 70%. In expenses, so I guess if it's closer to 50, maybe it's positive. If it's still closer to 70, it'll be negative, and if it's below 50, maybe that'll help the stock. But overall, I did nothing with Facebook, and you look at the chart, looks, still like you have this big range going sideways. This is, support 1, which we talked about, support 2, and in order for it to really get better, it's got to get above this and stay above this. Then you have highs, but a lot of things are not having success breaking above highs. This was the last time it gapped down, and it's been here since. I actually have to get going. It's 4:27. I apologize, but this trading is very random. It's very spurty. You have spurts to the upside that are real quick. That if you miss it and you come for a second or third tier move, it doesn't happen. Same thing to the downside. If you miss the downside move and you're trying to get downside follow through, that's been hard. So we'll see if that happens this time. We're back in the lower end of the range. We'll see what happens here at this 1995 to 2005 area. Do we gap below it and resolve to the downside and hit the measure move of the the head and shoulders pattern, or does this range just continue and do we bounce off the bottom end? Recently this month you've had to sell them when they look awesome and buy them when they look bad, and that's very hard for a momentum to try to do. We like to buy red dog reversals. We do buy them when into support like we did on that Friday and a rally, but then when it goes sideways and you think that it's holding up and you get slammed like we did yesterday, or at least I did, that makes it hard. Same way if you went home short today and it gaps up 20 handles and doesn't look back, you know what, you'll probably be upset as a short. So we'll see what happens. Traders need follow-through. And at this point, there's been some follow-through, day in, day out, but there hasn't been like real follow-through where you could trust the trend, and we'll see if that changes. Have a great night. See you tomorrow morning, and be well and smile. It doesn't hurt.